MongoDB. You've probably heard the name. It's the database company that developers absolutely love, and it's been making some serious waves, really challenging the old guard of enterprise software. But the big question is it a smart investment? Well, in this deep dive, we're going to break it all down: the tech, the business model, and the big arguments for and against the stock.
So, here's our game plan. First, we'll get into what makes this company a so-called disruptor. Then, we'll see how they actually turn that tech into cash. After that, we'll dive into the bull case, the exciting growth story, and then the bear case, the potential pitfalls. And finally, we'll land on the analyst's verdict.
All right, let's kick things off. What exactly is MongoDB? To really understand its role in the market today, you got to understand the core technology that makes it so different from the giants. You know, the oracles of the world that have been around forever.
At its heart, MongoDB is what's called a NoSQL database. Now, unlike the traditional SQL databases that have pretty much powered every business for the last few decades, NoSQL databases aren't built around these super rigid tables. Instead, they give you a much more flexible way to handle data.
Here's the best way to think about it. A traditional database is kind of like a spreadsheet. You've got your strict rows and columns, and you have to define that whole structure, what they call a schema, right from the get-go. MongoDB is totally different. It stores data in these flexible documents, and that is an absolute game changer for developers. They can change things on the fly and build apps way faster without being handcuffed to some old, rigid structure.
Okay, so MongoDB has this really powerful, flexible tech that developers are crazy about. But how does that actually become a business? The answer really lies in their two main products.
They make money in two main ways. First, you've got MongoDB Atlas. This is their cloud service where they handle everything for you. It runs on all the big cloud platforms, AWS, Azure, you name it. Then there's Enterprise Advanced. This is for the big companies that want to manage the database themselves, either in their own data centers or on their own cloud setup.
And check this out. The whole business is built on recurring revenue. A massive 97% of their income is from subscriptions to these products. For any investor, that's a beautiful sight because it points to predictable, stable revenue streams.
And their strategic focus? Oh, it is crystal clear. Atlas, their managed cloud product, is basically becoming the whole business. It now pulls in a full 70% of total revenue. And this is so important because it aligns them perfectly with the huge shift to the cloud. And, frankly, it offers much better profit margins. Atlas is the undisputed engine for their growth.
So we've got a clear business model. It's centered on the cloud. So what's the argument that this growth is going to continue? Let's flip over to the bull case and look at the key metrics and trends that get investors really excited.
Okay, this number right here, this might be the most important number for the bulls. A 118% annual recurring revenue expansion rate? What on earth does that mean? It means their existing customers aren't just sticking around, they're spending 18% more every single year. That tells you the product is becoming more and more critical to their businesses over time. Now, if you dig into their official filings, they're basically hitching their wagon to four massive trends. They're positioning themselves for the AI boom, saying their flexible model is perfect for complex AI data. They're also promising to make developers more productive, provide that always-on reliability that huge apps need, and, at the end of the day, lower the total cost for their customers. But of course, there's always another side to the story. The bear case against MongoDB really comes down to one single powerful idea for investors: the potential lack of a durable competitive advantage, or what we call an economic moat.
And look, one of the big analyst firms, Morningstar, slaps a no-moat rating on MongoDB. Their whole argument is that customers just aren't locked into MongoDB in the same deep way they are with older systems. And that right there is a long-term risk.
And just to be clear, an economic moat, a term made famous by Warren Buffett, is what protects a company's profits from the competition over the long haul. It could be things like high switching costs, a powerful brand, whatever. And this no-moat rating suggests that MongoDB's profits could be vulnerable down the road.
So why the no-moat rating? Well, the analysis points to three big reasons. First, they argue switching costs are lower. The data is often tied to just one app, not the whole company, making it easier to move. Second, while MongoDB is a jack of all trades, some specialized databases can do specific things better, like super fast searches for AI. And third, the competition is heating up. Even the old-school databases are now offering similar features.
And this means MongoDB is basically fighting a war on three different fronts. You've got the legacy giants like Oracle, the massive cloud providers like Amazon and Google who have their own competing products, and then all these nimble, specialized startups that want to do just one thing, but do it exceptionally well. So, we have the bull case, a fast-growing product that developers love, and we have the bear case, a crazy competitive market where it might be too easy for customers to leave. How does this all shake out in the final analysis? Let's get to the numbers.
The analyst report really boils it all down for us right here. A fair value estimate for the stock at $197. They're sticking with that no moat rating. And this is key, a very high uncertainty rating. That's them basically saying there's a huge range of possible outcomes here.
And to put that valuation into context, at the time of this analysis, the stock was trading just a little bit above what the analysts thought it was worth. That suggests that, in their view, the market price had already baked in the company's good prospects, leaving not much of a discount for all the risks we just talked about.
And that leads us to the final, critical question for anyone looking to invest. The very thing that makes MongoDB so great, its flexibility, might also be its greatest weakness. Does that flexibility empower developers and fuel incredible growth, or does it actually stop the company from ever truly locking in customers and building that durable long-term moat that creates lasting value? That is the billion-dollar question.